I think that the spot Bitcoin ETF is a monstrous offering capability that will have an impact first. That'll have an early impact because to the entire conventional Wall Street banking system. What it means is people with trillions of dollars of assets in 10 minutes can buy $10 million of Bitcoin, and they can do it no money down. So I could literally buy a $10 million house in 60 seconds with no cash, right? That's what happens when you get to an ETF. And so that will plug every major bank, every investment bank, all the money managers, all of the conventional Wall Street players into the asset class immediately. Let's say you're a hedge fund and you've got $1 billion under management. You've got an account with a big wirehouse like a JP Morgan or Morgan Stanley or Goldman Sachs. And you've currently got it invested in Apple or Google or Facebook or other securities or ETFs that trade on those systems. If you wanted to buy $10 million of Apple stock, you could pick up the phone and say, give me $10 million of Apple, put the phone down. And if you don't have the cash in your account, your banker will forward you the cash at SOFR plus 50 basis points. So you would pay 5% interest, and they would just go ahead and buy the $10 million of Apple stock. And then if you're short the cash, you're going to owe 5% interest on it over the course of the next year. But it's basically completely financed. Now, if you wanted to buy $10 million of an ETF like Bitcoin, and it's a spot ETF, you could do the same thing. You could say, buy me $10 million of Bitcoin ETF. They would front you the money, and you've got it in your account by the end of the day. Now, if you want to buy $10 million worth of Bitcoin, the asset, and you're that hedge fund, here's what happens today without the spot ETF. You have to go to your boss and say, I want to set up a new brokerage relationship with Coinbase. Then you have to get approval. Then you have to go to Coinbase. Then you have to get KYC. You have to wait 12 weeks. After the 12 weeks, if you've got it set up, then you've got to go to your board and you've got to change your trading mandate and get the permission to buy this. Then you've got to assign 3 people in finance to do then you're got to establish a trading plan. And after you've done that, that takes like a year of bureaucratic moves. By the way, and they're going to say, no, wait a minute, we're going to establish, you have to modify the compensation system, the compliance system, the custody system.
I mean, I get it.
Okay. And they're going to say, why would you want to do this for 1% of your portfolio? And so let's say you did do it. If you took the year and if they agreed to rebuild all of their systems and rewire them so you could buy this Bitcoin, then you have to go back to your boss and say, oh, I need 10 million in cash. Because Coinbase can't advance you the money. So then after you go and you buy the Bitcoin, the 10 million in Bitcoin, then on the rest of your portfolio, the conventional Wall Street ETFs and stocks, you can borrow against them up to 50%. You can even, like against Apple stock, you could borrow 80% loan to value for nothing. But there's nobody that's going to give you a loan against the Bitcoin. So it's not collateral in the Wall Street system. It's the second system. So what I'm saying here is Bitcoin, the underlying asset, is impossible to finance, takes a year to buy, it requires an extreme amount of systems reconstruction, and it causes everyone that you work for to be worried. Like they're all going to worry, well, what if you buy the Bitcoin and you wire it out to your own wallet, and what if you lose it? And so there's a lot of headaches. It's just not going to happen. And if it does happen, you can't borrow against it. But the spot Bitcoin ETF means I can have the same thing in one day for free. And then if it doubles or triples in value, I've got $30 million of Bitcoin. I can go borrow $15 million against the Bitcoin. I've already got the loan agreement. I've already got the best credit terms. I've got 50 basis point credit spread. So you see, one of these things is plugged into Wall Street, and the other thing is for the pioneers, right? The early adopters that want to take the arrows in their back. even in the CFTC and 2 SEC chairs have all said that this is a commodity, this is a legitimate asset class. So I think that we have a consensus that's building, and I think the pressure is now building. So I think the real question is just, will a spot ETF be approved in Q4, or will it be approved in Q1? If you had to handicap it, I would say I agree. You kind of go with a 75% likelihood. There's a 25% likelihood that some other crazy thing happens in the future. We don't know, but it definitely seems you'll have multiple spot ETFs approved. Not based on the current fact pattern, but what it does is it creates a clock running, like a 45-day clock that pressurizes a decision, and it creates pressure to approve it. I think most people perceive that. It's just important to note that the people with all the money are the hedge funds on Wall Street that are doing business with the wirehouses, and they're trading in equities in Apple and Google and Facebook and the ETF. So they're the ones that will actually move the needle. And even though we know the future, like we know, for example, that fair value accounting is coming, but it's not here yet. You've got to wait, some number of months. And we know that spot Bitcoin ETF is highly likely to be coming, but there's a big difference between knowing something is going to happen and being able to pick up the phone and call your broker and buy $50 million worth of it, right? So we're at that stage where we know it's coming, but we really haven't plugged Wall Street into the asset yet. We're in this in-between period, which in my opinion is the best time to be. It's like, the future. No one else can act on it. If you have a crypto account with a crypto exchange, you're able to buy Bitcoin right now. It seems like it's a no-brainer that this is a point where the risk-reward equation has really shifted. It's the least risk I've seen in 3 years with the highest upside. Sometimes in the crypto markets, there's this panic that lasts for like an hour or sometimes for a day. And then people all go, oh, what did I do? That was stupid. Like when Jerome Powell starts talking, about interest rates, and then the price crashes, and then the price soars, and then it comes back in. So I think there might be a little bit of adjustment, but at the end of the day, curing the structural deficiency will cause the discount to go away. So that's what I think on that. With regard to the other spot ETFs, I think it's highly likely they all get approved at the same time. And if not at the same time, if not like in the same press release, in the same week. I don't think that you'll see Grayscale approved and all the other spots delayed. The SEC has enough tools at their disposal that they can manage the sequencing of all these things to either approve everything or delay everything or slow something down and speed something up. So I'm, as you can probably guess, I actually think the future is good for Bitcoin. I think it's undervalued. There's never ending number of people on Twitter that come up with scenarios for me, figure out why you would, but they keep coming up with them. And it's always some crypto FUD, right? This exchange might melt down. That stable coin might melt down. Maybe the regulators will do this. Maybe GBTC will crash. But I don't think any of those things are anything more than maybe they scare you for an hour or a day. But if my holding time was a year, then I would just ignore all the noise. And of course, my holding time's more than a decade. So I think there's only 3 things that are relevant right now. Right? And here are the 3 things. The halving is coming with 100% certainty. And as far as I can see, most of the selling of Bitcoin in the market is the Bitcoin miners that have to sell in order to pay their electricity bills and pay their debt expenses and their operating expenses. So that amount of selling pressure is going to be cut in half in a few months. So we know that's coming. And then we know there's a spot Bitcoin ETF coming. And when that comes, we plug into Wall Street and the entire banking system. And then finally, we know that fair value accounting is coming. And now you're going to introduce this as a conversation into hundreds of boardrooms. They will not move in a week they move quarterly, but over the course of 12 quarters, you know, you'll start to see company after company looking at this, and you'll start to see a reallocation of assets. Right? At the end of the
So
day, corporations only hold two assets. They hold cash and they hold bonds. And so if Bitcoin is available as an asset, pari passu to a bond, then you'll see a reallocation from bonds to Bitcoin.